Good morning, everybody. Here it is, November the 20th, 2014, and we are ready to get after it again. Life has got to be pretty good. When you think about all the opportunities that we have and the way that we can take advantage of all the twists and turns that we continuously confront these days, in a lot of ways, it's very reminiscent of the 60s, only people aren't being assassinated in the States, and we don't have a hot war, big-time hot war right now. But in the 60s, you never really had a sense that the whole thing was coming apart at the seams, and now you kind of do, or I do anyway. But that creates opportunity for us. It adds extra volatility to the markets. It makes for big long-term plays. Like right now, the Japanese yen is headed lower, so is the euro-dollar. Long-term plays where you can buy puts and not screw up your regular trading. Crude oil is probably going to be down for a while because of Saudi Arabia's policy of trying to make the frackers in the United States think twice about acquiring acreage anyway, and then going out and borrowing money to drill it. And then at some point, the stock market will have to correct. And so we have a lot of opportunities here. The economic news out of China earlier this week was lower, with their PMI coming in at 50. France's and Germany's and the EU numbers missed pretty big overnight. The only positive piece of economic news was out of Great Britain, the UK, where their retail sales number was higher than forecast. So E-mini down, financials up. And this is a gift for those of you that play the overnight session, because it's just a real easy play, and you know where support and resistance are. Last night, you can see the easiest trade in the book is a limit buy or sell against a high volume number, and had the infamous retest of that low, a double test. The market, it holds, the market starts to trade higher, extends the range in Europe. London comes in and test this volume area right here. We get a move out of the middle, so we're looking at a P with resistance basically at 24. The overnight session high is 23. That matches London's high from yesterday. And the issue is today, can we take it out? Tomorrow is option expiration. And on the note, it's 26 to 127 is where the open interest is, where the play is, and on the 30-year, it's 40 to 42. These dynamics, the market 3 out of 4 times will trade within this range, so that makes a mathematical close tomorrow at 16. So I think that's going to be the central price, and you can see that we've got volume from 9 to 14 underneath the market that will support it. Today's news, jobless claims, 285. That's the default number. It's where we are every week. Remember, ever it was at 300. Now it's at 285. CPI, no one will pay any attention to it because the Fed is not raising interest rates. At minus a tenth, plus a tenth for core. Existing home sales, 5.17. That is the engine that drives the housing market. I can't buy your house unless I sell mine. Philly Fed, less than last month, but a pretty good number for that region, 18.3. And LEI. Nobody pays any attention to this number anymore because of the interest rate component. Interest rates are low. That number always comes in good. And in natural gas, where we're supposed to see our first draw for the year at minus 12 BCF. So the news focus will be jobless claims, number 1. I think Philly Fed will carry a little more weight than existing home sales. existing home sales. That's the order I see, but the bottom line is which way does the E-mini move today? And we'll trade opposite to that to a point. Then option expirational play. So we got a lot to play with today. This market has pointed up. The easiest trade to see is failure to take out 24. We had a breakout in London at 17, so our first buy is 13 to 17. Second buy is 9 to 5, which is where we had hoped to get in last night. But the bond players sense that maybe the E-mini might sell overnight. Funny how that works when you have trading desks at 6 sit next to each other. 23 to 27 will be sell 1, and sell 2 will be 31 to 03. Down to the direction of the E-mini when it's all said and done. Knob spread widened overnight. So the sentiment, it remains positive on the financials. No one's fallen out of bed to get long knob spread, but it holds in really, really well. And to me, that suggests economic weakness is how the bond market is playing. Okay, again, we had hoped to buy the bond cheaper last night. We weren't able to get in. You were able to buy below value, though. You had plenty of time to do it. Had a nice breakout right here, nice breakout trade. Definitely a P behind it. We're dealing with a P right now. We got resistance at the buck. The 27 to 31 is the sell zone. And then 3 to 7 will be sell 2. Option expiration favors 140 to 50. Excuse me, 140 to 142. That would make the mathematical close 141, and we're trading considerably above that right now. So this one looks like it's going to favor the high end of that range. On the buy side, we had the breakout from 16, so we'll make 13 to 17 buy 1. And this contract is volatile enough that we always have a pretty good chance of getting to our number 2 levels. So we'll engage the market at level 1, but we're not married to that position. But number 2 should be a pretty good buying level for us. You know, one of the things that the exchange members of professional traders are so good at doing is that they trade what they see, and they say, hey, you know, that's support, that's resistance. I'm going to lean against it. It's taken out. I've lost a couple of ticks. Back in the old days when there was open outcry, they had the advantage of seeing the bid and the offer change. They had access to perfect price information instantly, and they don't have that now. They have to trade like we do, and that makes it a little more difficult. Okay, gold had a pretty good evening. We had hoped to buy it last night when we left 75.77. That was our number 1 buy zone, and 77 was it. Had a retest of it in Asia, in the DEG area. It held, and then in K it starts to trade higher, and then it made it up to 95, 97, and our first sell was 88 to 90. Our second sell was 95 to 98. So again, if number 1, for those of you that are new, 1, 2, 3 support, 1, 2, 3 resistance. If number 1 holds, your trading target is number 2. They usually cross one level of support or resistance. And most of the time the markets are a little higher or a little lower, but they're basically moving sideways. And this structure, this is what makes structure so powerful. You know where the market should go, barring a change in the news. So I don't see that there's a lot that's changed. Sell 1, 95, 98, sell 2, 1200, sell 02. On the buy side, London's last rotate down was 84. We're at 91. So we'll try 85, 87, buy 1. And then 80, 82 for buy 2. Economic weakness, printing of more money, the Swiss referendum, several things going on right now that are supporting gold. But the biggest one over time is inflation caused by inflationary industrial policies at G20. It's around the globe. Some fear of economic collapse. There's a lot of things that longer term are working to support gold right now, and we can't forget those. The central bank intervention, smacking gold down when they feel like it. And you talk about a lawless event. I mean, that kind of market manipulation, but they're able to get away from it, get away with it because they're just really not held accountable for what they do like we are. And okay, crude oil, pretty tight for the overnight session. Not a lot going on. You can see that we've got pretty good buying in the 74.25 area. We'll leave our numbers there. That's where they were last night. And then 50 to 75, so number one buy held. We definitely are dealing with a P volume-wise. So looking 74, 75 to the buck is where we are right now. So we'll raise it a little bit. We'll go 75, 75.25, sell 1. Let them get into this area from yesterday, and then 50 to 75 for sell 2. Yesterday's inventory numbers were bearish. But again, the market sometimes trades those numbers, sometimes doesn't. It's not consistent. Looking at the euro, in a trading range, you can see once again that we got having a real tough time at 25.75, and when we left yesterday, we said a 60 to 70 sell. The high is 77 and the high is 67. So when London opened, you had a couple of shots of getting off a trade at 60 to 70. We're currently at 42. Last rotate up here was 67, so we'll make 60 to 70, sell 1, and then 90 to the buck, sell 2. On the buy side, 20 to 30 is where support is. We had hoped to buy last night 15s to 25s, and you had a couple of opportunities to come in the 10 area. In fact, I think we'll make it 10 to 20 buy 1. I really don't like the long side in this contract, as you well know. 80 to 90 buy 2. Lean against this area right over here. So what's the E-mini going to do today? Everybody's favorite market. It's pointed lower off the economic news overnight. The question is, can it break? And markets, usually we have 2 days of sideways activity anyway after the market has made new contract highs. I think we're in that right now. Again, the easiest trade to see is failure to get through 50. 54, that's not going to change. And the issue becomes, where do we buy it? So we've had this 36.50 leaning against this high volume number right there for the last 2 days anyway is an ideal buy. So 35.37 is buy 1. Buy 2 is 30 to 32. Kind of looking for a sideways day today again after the new contract highs. The market, London's high is 44. So 44, 46, sell 1. And then 49.51 for sell 2. Basically looking for a sideways day, but we do have news. And jobless claims will be the first piece of news to hit the market. It's kind of a default number. I don't think people are paying as much attention to it because it's always forecast at 285. And when the number kind of settles into an expected number and everybody makes their forecast based on that, then it's pretty hard to get the market excited. But the news out of Europe and China this week on the PMI numbers show slowing economic activity, and the FOMC minutes address that. They didn't think the United States economy would be too badly affected by it. Our PMI number at 56.2, that's higher than last month's at 55.5. The market will like to see this, seeing how they sold off of the PMI numbers out of China and the EU this week. CPI, no one pays any attention to it because the Fed's not raising interest rates to combat inflation. When the Fed starts raising interest rates to combat inflation, everybody will start paying attention to that number. Okay, existing home sales, we'll play. I'm guessing not as much as the Philly Fed, 5.17. Philly Fed, 18.3, down from last month's, but still a pretty healthy number. I think this is lower than last month's. I think the market will pay more attention to that than the existing home sales. LEI, no one pays any attention to that anymore. And the natural gas inventories, the energy traders will certainly play for that, minus 12 BCF. Where do we see next week strong after the cold weather that hit this week? So 1, 2, 3 is my estimation of how the news will play today. And the issue really becomes, can we crack 30 to 35, which is where I have pretty good support right here. And resistance is basically 45 to 50 to start. So we'll see how the market plays, and the news will influence that. Okay, it'll take about 20 minutes for me to get everything up, around, and posted. I will get busy on that. I'll see you as fast as I can.